Awesome. Well, welcome everyone to the first High Roller Summit for BitGo. We have a lot of great panels today, but this one's going to be mainly focused on the crypto mining segment. So we have a great panel, great list of panelists today. If you guys want to just quickly introduce yourselves, maybe a bit of background and how you got into the mining space, that'd be awesome. So we'll start with you, Pierre.
Yeah, sure. Thank you. My name is Pierre Rochard. I first learned about Bitcoin in 2012. Really went down the rabbit hole, started writing about it, co-founded the Satoshi Nakamoto Institute with my friend Michael Goldstein. So please check out nakamotoinstitute.org for some great education. I've done lots of podcasts as well. I actually co-host a podcast with my wife, who's a financial planner, Bitcoin for Advisors. And I really got into the mining space thanks to Riot. There was a political attack that was going on in 2022 after the China mining ban. So I joined their team as VP of Research to really develop the intellectual policy case for why Bitcoin mining is not a waste of resources and is actually a positive impact industry. We have decisively won that argument from my perspective after the recent election, and recently left Riot. I miss the mining industry, but I'm going to continue doing Bitcoin mining education as part of my mandate of promoting Bitcoin in general. So happy to be here.
Hi, everyone. My name is Jurica Bulovic. This year is my 10th year in the Bitcoin space. 7 of which was in the Bitcoin mining space, and that's thanks to my then employer Fidelity Investments that got really early into the Bitcoin space, researching it as well as mining it. So I started there, and I joined Foundry in 2021 to focus exclusively on Bitcoin mining, and currently I run enterprise software business division there.
Hi everyone, Adam Swick, Chief Strategy Officer at Mara. Background is consulting, venture capital. Got sucked into the world of crypto, spent some time at Kraken, and found my way into mining as a Bitcoin lover and wanting to dabble with and experience and try a lot of other things. Bought my first miner, watched some YouTube videos on how to get it hashing, had it running in the living room, and now work at Mara with 50 exahash. So nice up and to the right trajectory in terms of my personal mining journey.
So we have somewhat of a mixed audience of people maybe not too privy to crypto mining and mining pools. Can maybe each of you just describe what a crypto miner is, what the purpose of it is, and how you kind of fit into the ecosystem specific to mining?
Yeah, sure. So if we look at Satoshi's white paper from October 31st, 2008, he really lays out 2 purposes to what the mining is. And it's actually the central innovation of Bitcoin is the proof of work mining. The rest of it is kind of already known concepts. So the first purpose is to provide a temporal ordering of transactions to provide transaction finality. So you can think of Bitcoin mining like a decentralized clock that ticks every 10 minutes and that is calibrated from the outside by Bitcoin nodes. So Bitcoin nodes are verifying the blocks being proposed by Bitcoin miners, checks and balances, and Bitcoin nodes are very efficient and cheap to run, so you can run it on your laptop or on your desktop. And that the second purpose of Bitcoin mining is introducing new units of BTC onto the ledger. And that issuance schedule is set by the nodes. So the nodes verify that the miners are not just creating more Bitcoin than they're allowed to per the consensus rules. And that quantity actually gets cut in half every 4 years, so that asymptotically, the total Bitcoin supply will cap out at 21 million Bitcoin. Already today, 95% of the Bitcoin have been mined. So when you think about it from the dilution of an asset perspective, Bitcoin has achieved the status of being the hardest money in the world. And that's, I think, what has been driving its market cap to $2 trillion now.
Maybe I'll just add, for people's benefit, just the evolution of Bitcoin mining. It did start on laptops. You could, in the early days, mine with a laptop, so did Satoshi. And I think we'll talk later about drive for efficiency by Bitcoin miners, but they realized, oh, if I use GPUs instead of CPUs, I can be more efficient. And so more and more home miners at that time started putting laptops together and being more efficient at mining. And then over time, in 2013, this is when we started getting these specialized units that are orders and orders of magnitude more efficient than a laptop. And so in a very short amount of time, in less than 12, 13 years, we have now come to the point when there's trillions and trillions and trillions of hashes per second mining Bitcoin.
Yeah, it's quite fascinating because of this self-adjusting mechanism to make sure that that clock ticks every 10 minutes as we wrestle with this thing called global hash rate. And so it is a zero-sum game when it comes to Bitcoin mining. And so what it means is there's a huge incentive financially to make sure you're extremely efficient when it comes to Bitcoin mining because if you're paying a lot of money for your electricity and you have an older generation machine, you might actually be losing money. And therefore you will unplug your machine, which means there's less machines around the world trying to Bitcoin mine, and so the proportion of everybody else's goes higher. And so, the person paying 10 cents per kilowatt hour will unplug their machines, and everybody paying 9 cents and below will get all of the Bitcoin for that day. If it's still unprofitable, the people paying 9 cents a kilowatt hour will unplug their machines, and everybody paying 8 cents and below will get to split all the Bitcoin for the day. And then if Bitcoin price shoots up, then suddenly the people paying 9 and 10 cents might be able to plug their machines back in. And so it's fun and also frustrating to have Bitcoin at all-time highs, and people get excited that you have Bitcoin price so high, but global hash rate, meaning the total number of computers plugged in around the world, is also pretty close to an all-time high. And so mining economics are still very thin. And so it's been fascinating over that period of time to not only watch the hardware improve, but to watch every other efficiency across the mining stack improve, whether it be the electricity price, the cooling mechanism used to keep these computers cool. It's been rapid over the past, just barely over a decade.
So I think energy usage is kind of a hot topic in the space right now. Would be curious just strategies you guys are implementing to ensure that you are minimizing your energy consumption but maximizing profits from a mining perspective. So would just be interested to hear maybe infrastructure, types of energies you're investing in, et cetera.
Sure, I can take a stab since it's the world we live in. And as mentioned, it's incredibly important to be efficient. And so I've worked at Mara for a little over 3.5 years, and there's been a step change function in how we've worked over those 3.5 years. Stereotyping, it used to be you would call the local power utility, you'd say, I'd like hundreds of megawatts of power, I would like to be your customer, I will pay for that, and I'll mine Bitcoin. However, a lot of people did that, and so that global hash rate went up, and so it was no longer profitable or competitive to call your local power utility and just be a customer of that power. Instead, you're seeing it shift to you have to be a partner of power providers. You have to find ways to unlock cheaper electricity, and the way to unlock cheaper electricity is to create win-win scenarios. An easy example to wrap your head around is Mara has a 250 megawatt data center in the UAE. The UAE has an incredible energy generation and demand mismatch. During the summer, they run a ton of air conditioning, which requires a ton of power. And so they have to make sure they have enough generation built out to fulfill all those air conditioning needs. However, when it's not a hot summer day, or for when it's not summer, energy demand is this much. And so you have this gap of all this energy generation sitting idle for most of the year. You need it for when everybody turns on their air conditioning, but what does it do for the rest of the year? We came in and said, how about we use it to Bitcoin mine? And so it's this symbiotic relationship where when everybody turns on their air conditioners, the electric company calls us and says, shut down, and we do. And when they say, nobody's running their air conditioners, please turn on your Bitcoin mine, we do. And so it's monetizing and using something that wasn't used before. And so, again, a win-win because it's electrons that would have been doing nothing before, and suddenly we can buy them from the electrical utility. And so it's these, and there's many more, heat reuse, many other out-of-the-box ways of thinking to try to be more efficient. And this is, not to get us off topic, but Bitcoin mining sometimes gets a bad rap for the amount of electricity it consumes. But again, when the devil's in the details, and when you start to understand that, yes, we're consuming 250 megawatts in the UAE, but that's the context in which we're using it, I would argue it's actually an incredible thing that we're doing that, and it's a value add that we're consuming that 250 megawatts, and there's many other use cases. And so that's the future of mining, is finding win-win scenarios where you're kind of solving a problem where Bitcoin mining just happens to be the tool that you're using to solve that problem, and you're no longer just buying power.
So in Texas, where Riot has its main facilities, we have this similar seasonal issue with air conditioning. On top of that, we also have an issue with renewable variability. So during the day, we have 20 gigawatts plus of solar, and then as the sun sets, that solar ramps down within the span of an hour to 0. And on top of that, ideally, that would be perfectly matched with the wind picking up, and then you net it out. But sometimes it takes a little longer for the wind to pick up at night, and so there's a gap where you either need to ramp up lots of natural gas peaker plants, or you need to ramp down load. And in Texas, we have a really well-designed market mechanism that uses price signals to provide that flexibility. And so when the electricity price goes up for that small window of time, it actually becomes unprofitable at the marginal cost perspective to mine Bitcoin. And so there's a natural market incentive to curtail and turn off and let that electricity go to the higher, greater uses of people running their air conditioning and hospitals and manufacturing and all of that. And so it's really important to make sure that there are price signals in the market that dictate where the electricity is going, because Bitcoin mining has a very low price point from the marginal revenue perspective. Generally speaking, today, you're somewhere between $70 to $150 per megawatt hour. And so that, compared to other consumers of electricity, is very flexible. And Bitcoin can also act as a dimmer switch, because you can very granularly decide how much load you're going to shed so that you are not overloading the electrical transmission and distribution system.
Foundry is a service provider, not a Bitcoin miner, so I can't comment on our energy use. But I do want to stress at one point here for the audience, Adam, what you mentioned. Energy consumption is not bad in itself, and there's definitely a wrong view that's been out there that Bitcoin uses a lot of energy and that's a bad thing. I am an energy maximalist. I think societies that use a lot of energy are better on every metric that you look at, and so we should be developing more energy, using more energy, a cheap, abundant energy, and so I think Bitcoin helps with that, and especially for those other benefits that you guys mentioned, benefits to the grid, I think Bitcoin will help get us there where we want to be. It's not standing in a way, or it's not a problem for that vision.
Yeah, to add to that, I was kind of focusing on when there's high prices, but that's actually less than 1% of the time for the Texas grid. The majority of the time, you can even have 0 to negative electricity prices, because there's an overabundance of wind and solar on the grid. And so Bitcoin mining isn't just about curtailing during scarcity, it's also about absorbing all this excess capacity to make sure that electricity producers actually have revenue and stay in business and are around for the peak times. If they're not making money in Texas, they will move their power generation to other jurisdictions where they can make more money, and then during that August summer, will not have enough generation and have to have rolling blackouts. And so it's very important for power companies to be making money during the shoulder seasons when nobody needs their air conditioning.
Awesome. And then just to pivot a little bit, so as we know, Bitcoin is somewhat of a volatile asset. Curious on your guys' strategy that you kind of execute at your company to kind of factor in that volatility, and just ways that you are looking to kind of alleviate the volatility of the asset class.
Yeah, Mara is a huge hodler of Bitcoin. We have almost 50,000 on our balance sheet. And we take a long-term view is the first answer. And it's kind of fun if you talk to a lot of Bitcoiners, one of the predominant narratives you'll hear is advocating dollar cost averaging in to smooth out that volatility. In a way, Bitcoin mining is kind of doing that for you, because we're mining it all day, every day, and dollar cost averaging into it. I think it's about zooming out and believing in the asset class. And if we were trying to trade on the order of days and weeks, You could win some or you lose some, but instead we're building data center projects with multi-year time horizons, which I think shows our long-term belief in the asset class. And it's also all relative. Again, a lot of the craziness going on in the public markets, Bitcoin looks relatively tame compared to some stocks that you look up against. But I think if you assemble a team, again, a company is nothing but a sum of individuals, and if you have a lot of individuals that are bought in, believe in this long-term vision, there never really is that stress when it comes to volatility, downs or ups. When Bitcoin price might dip down, the Mara chats are not filled with, oh my gosh, what are we going to do? The Mara chats are filled with, hey, I'm looking through my couch cushions for quarters to buy some more Bitcoin and buy the dip. And so, I don't know, and Wall Street is coming along on that journey. I think they've come a long way in understanding the asset, and again, the volatility has smoothed out a little, but we wake up every day trying to get as much Bitcoin as we can and let the price do what it will.
And when we think about volatility, we have to keep in mind that it's an upward skew. So if Bitcoin was not volatile, it would just not go up in price. Something would be broken about it, or it wouldn't be interesting from a financial perspective at all. And that companies can actually look at volatility as an opportunity. And so, for example, we've seen Mara, we've seen Riot, we've seen MSTR, lots of publicly traded companies actually take that volatility and use it to drive down their cost of capital through the use of convertible bonds, because that has an embedded call option in it, and that allows them to pay a lower interest rate on the bonds. And so the volatility is not just a challenge, it's also an opportunity, and I think that's where the financial engineering has to be thought about to manage risk.
And I would just add, when Foundry was a Bitcoin self-miner, which we were until earlier this year, and we spun out that business, our strategy was mine Bitcoin, sell it every day, because we thought that we are in the business of trying to mine Bitcoin as efficiently as possible and not bet on the appreciation of that. Our background is that we are a subsidiary of DCG, and there's definitely elements of that business where appreciation in Bitcoin price value would be captured there. For Foundry as a service provider, and especially as a pool provider, it is almost, you can think of it as a Bitcoin denominated business, and volatility in Bitcoin doesn't really play a role, because we pay miners in Bitcoin, we earn Bitcoin, and all we have to do is make sure that we are maintaining well the Bitcoin treasury to be able to absorb the Bitcoin mining variance risk that our clients offload to us.
I mean, yeah, it's volatile. There's macroeconomic events, there's regulatory shocks, there's headline shocks, but ultimately what lets me sleep at night is it's just supply and demand. And the great thing about Bitcoin is we know the supply, which Pierre laid out for us in terms of every 10 minutes, and so then the only question is demand. If you think demand is going to go up, then you shouldn't really care about the short-term shocks. And if you think demand is going to go down, then that's a different answer. But that's as simple as that in my mind.
Awesome. So I think in the mining industry now, we're seeing a lot of competition and a lot of crypto miners popping up, and it's a pretty competitive space. Just curious how your companies are kind of differentiating yourselves in regard to the competition in the space now, and just kind of your competitive advantage within the mining space.
Yeah, in the mining space, we're focused on being efficient. As I mentioned, that can be the machine types you use and how you get those machines, which are expensive. It can be in the cooling infrastructure, because those machines get hot, and so how do you keep them cool? What do you do with that heat? Can you put that heat into a more productive use? It's about where you're sourcing the energy, creating those win-wins. Like you mentioned in Texas, like I mentioned in the UAE, there's many more examples. All of those come together. Another way we try to differentiate is we're focused globally in trying to find those win-win scenarios. Again, everybody has their niche and focus. We've decided to look all around the world. And a third is through this HODL commitment, is we're very committed to not selling any of those Bitcoin, which a lot of are, but it takes a strong commitment to do it through good and bad times. I don't know, those are three off the top of my head.
And maybe I'll add, I do think a lot about how Bitcoin mining competitive space has changed over the years and how it will change, and it's less from Foundry, again, is a service provider, so we think we're going to serve whoever is in the space and mining Bitcoin, but there certainly are centralizing forces in Bitcoin mining. There's economies of scale, and there's a reason why you have a handful of large Bitcoin miners like Mara, like Riot, and there's definitely a feedback loop. The larger you are, more access to capital you have, and the more access to capital you have, the larger you can be. And certainly miners are very capital-intensive businesses. So I think that's going to continue. And then on top of that, we do have Bitcoin halvings every 4 years, and this is really a shock to the industry. It's a cleansing event where you do have the non-efficient miners going out of business. So in those periods of times, we certainly see a lot of M&A and a lot of activity where, again, these successful, efficient, and large Bitcoin miners are acquiring small ones. I do think that the future of this industry is not where you have 1 or 2 big Bitcoin miners and that's it. I still think that you will have mid-sized and small Bitcoin miners. And for the reason, because Bitcoin miners are always trying to find a efficiency, trying to find good, cheap energy, you will always have somewhere in the world access to 5, 10 smaller amount of energy, really good projects to build. And I think that will be out of scope for Bitcoin miners that are already at gigawatts, multiple gigawatts. So you always have these small entrepreneurs that will tap into that energy. Now, it's tough to say what percent of hash rate will be big guys versus small guys. And then the 2 other aspects, home mining, I know it's trying to kind of get back, and I'm cheering for it. I really don't know how big it will be. So I think that's another segment that we're looking out for, even though retail is not the focus of Foundry. We are purely focused on institutional. And then the 4th element of that we're looking is nation-state mining, countries mining. We have seen starting of that, but certainly not at a scale when you think that nation-state are actually mining. And I tend to think a lot, what is that future in 10 plus years? Can large private companies compete with nations mining, because clearly they have different resources. So we'll see how that plays out.
Yeah, I agree with the point that there's profitable business strategies at every scale, and so we'll continue to see a relatively decentralized mining industry. I also don't think it would be the end of the world if we kind of just take the reductio ad absurdum argument of only one miner, that when we look at Bitcoin's architecture, the decentralization is based on the fact that Bitcoin mining is permissionless. So it really is about the equality of opportunity, that anybody can contribute hash rate. And in terms of the outcome, is if there's no censoring going on and there's no network congestion going on, so transaction fees are very low, and we've got the halvings, and so the new issuance is getting lower and lower. One reaction to that is, well, isn't the security of the network decreasing? And I actually think that's a logical fallacy. I really think the network of the security comes from the nodes, and the miners are not owed a living by the nodes. If the network is not under attack, then there's no reason to be paying high transaction fees. If it is under attack, then there is a natural incentive that to get your transaction finalized, you're going to bid up your transaction fee. It's not some kind of altruistic motive of we need to keep the big Bitcoin miners in business. And furthermore, what we've seen is that as Bitcoin mining profitability becomes challenging, Bitcoin miners, they're agnostic as to whether they're mining Bitcoin or providing AI HPC workloads. So it's not like if they're hurting in terms of opportunities out there. Even they could be doing AI HPC and putting that revenue towards stacking Bitcoin, right? There's no rule against that. So I think that going forward, we'll see an increased amount of flexibility in terms of the operational activities of Bitcoin miners, and that the Bitcoin network will continue to be just as secure at any hash rate.
Awesome. And then I think a pretty prevalent topic in the industry right now is regulation. So we'd be curious on your guys' thoughts on key regulations within the mining space, key considerations you guys are considering when these regulations are starting to become a little bit more clear in the space.
I think that there's nothing wrong with regulation as long as it's really fit for purpose. And so that's where I think it's really important for the industry to be engaged in the policy making process and to not just be cynical about it. I've been at the Texas Capitol. I've been at the D.C. Capitol. And before getting involved in public policy, I had some myths or stereotypes in my mind about what that would involve, right? In my mind, it was like, okay, it's just about money, and so we just got to give them money, and then they'll agree with us. And that's just not true at all. What I found is that it's really three priorities. Priority number one for policymakers is making good policy that is good for citizens, good for the United States, and that good for the industry, right? And so they're not looking to, for the most part, with the exception of Senator Elizabeth Warren, they're not looking to sabotage the industry. Second is that they want to make sure that they are being responsive to voters. And what we saw in this recent election with Sherrod Brown losing to Bernie Moreno in Ohio is that the voters, the crypto voters, the Bitcoin voters, they don't like the anti-mining messaging. They see it as anti-innovation. And so I think that the voters are on our side, and we have to continue to educate the local communities that we operate in so that we don't antagonize them needlessly, right? From kind of just not being available to them and hearing their concerns and being responsive. And third is the money. And so it is important that Bitcoin miners have contributed to PACs and have contributed to making sure that there is advertising out there that is talking about what is the value of Bitcoin and what is the value of Bitcoin mining to the grid to make sure that our messaging is known to the public, because at the end of the day, if you don't write your own story, somebody else will write that story for you. And it will be paid for by Ripple through Greenpeace, and they will be putting out myths and FUD about Bitcoin mining.
Yeah, I'm encouraged just because this is complicated stuff. As a regulator, you're dealing with a lot of things, and the stuff that we're talking about, again, trying to give a basic intro to mining, it probably was already still pretty confusing. And so for them to take time to try to understand mining specifically, what's Bitcoin, how does it impact the grid, why are they consuming so much power, wait, is it actually, it's a lot of time and confusion. And so I'm just pleased that people are actually taking the time to learn about it beyond the surface level. Second of all, I'm glad that they're thinking about it thoughtfully. Again, it's so easy to say, hey, this should be a law, but then there's all these edge cases. And again, understanding that what you're doing is setting precedent and this space is evolving so quickly, the laws, if they would have made crypto laws 5 years ago, probably they would have gotten legislated 20% of what they needed to today, because it just moves so fast. And so I think they recognize they need to keep up. And then, yeah, globally, how do you continue to compete? How do you make sure that you don't fall behind? How do you make sure that the whole purpose of Bitcoin is decentralization? And so if you stifle it here, it's going to grow somewhere else. It's happened with mining. You watched mining get banned in certain countries, and global hash rate goes down as those computers unplugged. But guess what? It came right back up because those computers found somewhere else to plug back in. And so I hope people understand that you can't stifle or stop this industry, and that it'll always grow somewhere. And all you can do is support it the best way possible. And then next to regulation is just this whole, what do governments do with Bitcoin in regards to strategic reserves? Is this another gold that you have to stockpile? Do people realize that there really is only 21 million? And there's a lot of game theory type things in terms of, if this country has a lot, do you need a lot? If the US told us to stop, told all US miners to stop, told the world to stop processing transactions from country XYZ, then country XYZ couldn't access the blockchain. So therefore, does country XYZ need to be mining to ensure that they can process their transactions? This is, again, this is 5 minutes of rambling, but this is super complex. And so I don't envy those jobs of regulating and policymaking, but I'm glad that there's good advisors helping them and that they're thinking about it for the first time in a serious way.
Yeah, I would just add, I think it's clear that the Bitcoin mining industry has learned over the last 5-10 years that you can't just sit back and expect that the outcomes will be as you expect them. Even though you read the white paper, you can say, it's clear to us that Bitcoin is good, that Bitcoin mining is actually net positive, not even neutral, but net positive for the energy infrastructure of any country. And so I think the bad policies that were done in the past are mainly coming from misinformation. And so clearly the industry is getting more engaged. We got to do more advocacy. A lot of companies are spending more time in DC. And we have certainly seen a lot of progress, and I think there's going to be more to come.
What we saw too was that by educating about Bitcoin mining, first of all, there's the electrical engineering part of the stability of the grid. Second, there's questions around carbon impact. And then third is, what is the value of Bitcoin? Because ultimately, if the policymaker believes that Bitcoin has a zero value or even a negative value on society, right? They might see it attached to drug dealers and criminals. Then to them, it doesn't even matter if it has a positive impact on the grid, because ultimately it's supporting a system that is antisocial. And so providing the education on the value of Bitcoin, busting the myths around the criminal usage, and there's less criminal usage of Bitcoin than there is of dollars, and bring that data forth from credible sources, then that actually led to the conversation of, okay, the scarcity. Well, let's have a strategic Bitcoin reserve, and Texas is very far along in that. In fact, the House and the Senate have both passed a bill to establish a strategic Bitcoin reserve at the state level. And as long as they kind of finalize the amendments on it, probably this week or next, it'll be headed to the governor's desk, and Texas will be a buyer of Bitcoin. So it really shows how the attacks on the Bitcoin mining industry are actually causing very positive effects for pro-Bitcoin policy.
Awesome. And then just maybe for your past self or a more junior miner, what are some key things you've learned along the way, or key considerations for someone kind of just starting out within the space, if you have anything to share?
I think it's fun. Mining specifically, it's fun. You're going to learn a lot. If you wanted to buy a miner, do so. It's fun. I wouldn't expect to make millions of dollars off the miner. I think a lot of people, I've interviewed some candidates actually who candidly mentioned that they were surprised by a halving and they bought a miner just before a halving and were shocked that all of their projections were cut in half. But if you approach mining as a part of this ecosystem and helping to complete the full picture of Bitcoin and crypto, super exciting to go into. I think I initially approached it as like a get-rich-quick scheme, and it does not work out that way. But instead, it's a much bigger picture. It's tied into all these other things. From that standpoint, I don't know, it's very exciting, and for me, it's been a fun, almost gateway to get people into Bitcoin. I think a lot of people that I've interacted with and tried to talk to about Bitcoin for the first time, they struggle to wrap their head around this thing that they can't touch and feel. But when you show them a machine, I don't know, something clicks in their head, and they're like, all right, this is a thing. Let me understand what this thing does. This thing is securing the Bitcoin blockchain. All right, now let me understand Bitcoin. And so, I don't know, there's my little tip and hack to people is by carrying around one of these machines, it helps to make something real that people might struggle with.
I still think that Bitcoin mining is for everyone, small, medium, large miners. But there's certainly a good time and bad time to get into Bitcoin mining. And I think bad time to get into Bitcoin mining is when Bitcoin prices through the roof, margins for Bitcoin miners are fat. And I've seen it over and over in those times. A lot of people are trying to get in with very bad plans, trying to take advantage of that quickly. And that actually, I think this is the recipe for failure. I think if people are serious about getting into Bitcoin mining, start planning now. Think about how you're going to approach it, how you're going to be competitive over a long period of time. Is your setup going to work after next halving that is coming? So starting to think now versus making very split decisions when the market's hot is a bad time. So that's my advice.
Yeah, I'd say that mining is a hyper-competitive industry. It's arguably the most competitive industry in the world. So I'd first ask you, are you sure you want to get into mining? And that second of all, there's often this view that, Bitcoin mining is a way to outperform Bitcoin, right? Instead of just going out and buying spot Bitcoin. And that is very speculative. And so if you have a thesis, it had better be very data-driven, and also that you have a competitive advantage on the engineering side, on the access to capital, on the access to energy resources. That means that you're going to be able to be well positioned in what is really a very competitive industry.
Awesome. So I'm going to open up to Q&A with the audience, but I wanted to give all of you guys a chance to maybe make some closing statements or just if any announcements you wanted to share specific to your companies, personally, et cetera.
No, nothing major for me. It's just very exciting being at this year's conference. I mean, it was intriguing having regulatory tailwinds. It's intriguing having Bitcoin at all-time high price. And so there definitely is a very positive attitude, but yet it doesn't feel like people are flaunting it. And so I'm very encouraged by the energy. The energy seems to be, man, let's take advantage of this and let's go. My concern was the energy was going to be, we did it. And so, I don't know, that's my takeaway, and then I hope that it's the energy I feel, and I hope the energy that everybody else feels moving forward. Again, tons of accomplishments looking forward, but also tons more to do looking to the next 12 years.
It's awesome to be at the conference. It's very interesting. Bitcoin is at all-time high, so you can maybe feel that in the room. But for Bitcoin miners, definitely economics are not at all-time high, and Bitcoin miners definitely think in terms of hash price. And what that means is, okay, it doesn't matter where the Bitcoin price is, if the space is very competitive, if there's a lot of compute power on the network. So definitely if you talk to a Bitcoiner that's excited about the space versus a miner, you may get a slightly different answer where in the cycle we are. In terms of the kind of my outlook, I don't have any big announcements. We did not get too much or at all on Bitcoin mining pools. Foundry runs the largest Bitcoin mining pool, and I am excited kind of for the future of Bitcoin mining pools, how that's going to continue to develop, and we're going to use our position in the space responsibly, and we have a lot of great plans in that space. And in terms of other products on the software side, we are pushing miner management solutions. That is software that helps people or enterprises run the data centers. We're doing big pushes inside operations, which is helping people run data centers, as well as firmware, which is, it's a lower level software that's really running these machines, and there's a lot of innovation that's happening at that level. And so I'm really excited about what's to come from Foundry.
Yeah, I'd like to announce that launching a podcast with Bitcoin Magazine, the Bitcoin for Corporations show. So we're really focused on helping educate the C-suite and board level of what is a Bitcoin treasury company, why are so many companies pursuing this strategy, and a lot of Bitcoin miners are pursuing that strategy as well. So we'll get through the ins and outs of that. You can find me on X at Bitcoin Pierre.